You're outperforming both the volume as well as the ISM manufacturing. Is that because of the efficiency? Is she right? Is that what's driving that?
Well, we're working on a new strategic plan, which we unveiled recently, and the plan combines growth and better efficiency. So that's the formula for success in our business. Yes, you become more efficient, but you also pursue yours and your customers' growth.
How do weak truck rates impact your ability to raise prices? I know that's sort of been a key driver of that outperformance relative to the volume growth.
Well, Brooke, the cutting edge of truck rates has softened a little bit recently. The non-asset-based transporters and brokers have seen some softening truck rates, but historically speaking, truck rates are still pretty high, and trucking remains tight. So, that we benefit from that. We have a big intermodal business, which plays right into the trucking sector.
You mentioned your new strategic operating plan that sort of adheres to the principles of precision scheduled railroading. And we've seen sort of that adopted across different railroads. At what point does that start to swing the pendulum more toward rail? At what point do you start to take more share away from the truckers as an industry?
Well, that is our goal. The goal is market share from trucks, getting freight from the highway to the railroad. So that's our strategy, and it's already working. We've grown intermodal volumes spectacularly over the last few years, and our new strategic plan calls for a continuation of intermodal volume growth. That will be in the lead as far as the growth is concerned. Meanwhile, we're pursuing efficiencies, and we're aiming for a lower operating ratio. We've already posted great results with more to come.
How much is the government helping you by not fixing the roads, as we hear about infrastructure just yesterday? Because we hear it's more and more difficult for truckers as a practical matter.
Well, anything that's good for the American economy is good for the railroads because we serve the basic economy. So any kind of infrastructure bill we would benefit from, perhaps directly in the form of partnerships with federal government agencies, but also through the products that we haul.
How is business?
Business is good. If you look at car loadings, which is sort of how we view the world, the economy is on a solid footing. Now, compared to last year, the growth has slowed a little bit. Last year, volumes were very strong at this time. But from the perspective of 2019 and looking out, we're feeling very good about the economy, and so are our customers.
Just to go back to your operating plan a little bit, and I mentioned other railroads have done this, sometimes not always with the best reactions from customers. And Norfolk Southern's approach has been called a little bit nicer. And I wondered if you could just talk about that and sort of what the feedback is that you're getting from your customers as you push through some of these efficiencies.
As we implement the new operating plan, Top 21 we call it, we are working closely with our customers. So our difference will be to take a very collaborative approach with our customers, letting them know the changes that are coming, bringing them into the process, making sure that the new operating plan works for them as well as for us. So it's a collaborative approach designed to minimize the kind of service disruptions that we've seen in past implementations.
How far are you into the process? This is a precision scheduling railroading. Have you done 10% of it, 50% of it? How much upside is there still to come?
Well, so far we've sort of prepped the battleground for it, if you will. We've been through locally and made a lot of changes to local operations. Later this year, we'll flip the switch on a new operating plan for the network as a whole, and that's when we expect to see the big changes in network operations and cost reductions as well.
Go ahead, Brooke.
I think analysts were pleasantly surprised by the improvements in train times and dwell times in your first quarter. Do you feel like you're ahead of schedule to hit your 60% operating ratio target by 2021?
We do. We were able to create much greater network velocity, so train speeds and terminal dwell, the amount of time that cars spend in yards, dramatic improvements over the last quarter or two. And that sets the stage for the bigger operating plan changes to come, when we will begin running trains differently and produce further cost reductions, efficiencies, and growth for our customers.
Friday is Jobs Friday here in the U.S. We just got a killer ADP employment number. What's it like to find workers right now for you?
Well, it's tight. We need good, qualified people working out on the railroad, working in our offices, and so we're out there all the time looking for the best possible talent for our company. And it's true, their jobs are plentiful, and we have to work hard to recruit and retain the best people.
How do you work hard?
We work hard by making sure that we're paying a great wage and that we have good benefits package. We're a largely unionized industry, and so our benefits and our wages are collectively bargained at the industry level. So that's part of the process too.
When you say the economy is on a solid footing, where are there differences, either regionally or by certain things that you ship? Where do you see some weakness? Where do you see some strength?
Well, the growth, it's pretty broad-based, actually. So we haul all kinds of industrial products, everything from chemicals to paper products and finished automobiles. And, we did see a bit of a slowdown in automotive volumes in the first quarter. In our case, that was largely because of circumstances related to our company and our customer base, certain plant shutdowns and so forth. But, overall, we're feeling pretty bullish, and so are our customers. I met with a group of customers yesterday, and they were all looking for growth this year.
Are you worried at all about the automotive market? I mean, I know you said that was maybe some idiosyncratic issues there, but that's really been a problem spot for industrials writ large. I mean, as you sort of play this out down the road for the year, do you see volumes holding steady there, picking up?
Well, we think that the automotive production and sales in this country are what we call a high plateau. So yes, things may be softening a little bit, but relative to the past, it's still at a fairly high level, and we benefit from that, as do a lot of suppliers to the automotive industry.
How much of your business is tied to agriculture, and what are you seeing there? Because we're seeing farmers' incomes really come down. We have the problems because of tariffs and trade with soybeans, for example. Are you seeing some diminishment in agricultural shipments?
We do. We do have an agricultural products business. We handle corn and wheat, ethanol, and other agricultural products. So that's part of our business. It's a relatively small part of our business. We think that the opportunity to export may be somewhat more limited, but through our Gulf Coast ports. But in general, we think that we have an opportunity there as elsewhere in our industrial products.
How much do you think that the trade war with China has distorted your flows and your order book, et cetera, in the last year or so? Our international intermodal volumes were actually up in the first quarter, and some of that may have been pulled forward based on the possibility of tariffs. But when we look out into the balance of the year, we're still feeling like there's growth ahead, particularly on the domestic side of our intermodal business, where we have terrific channel partners, are very exposed to the consumer economy. Our customers are looking for growth there, and so are we.
You mentioned potentially pull forward of orders, and we've seen that, some commentary from companies like 3M where they're talking about destocking and sort of an inventory hangover from that pull forward. Are you seeing those dynamics in your own business?
Well, looking out to the balance of the year, yes, we think there has been some inventory buildup. As transporters, we'll help to move those goods out into the economy as well from inventories. But the key point is that looking ahead, we think that there's growth possible for the rest of the year as well, and we'll benefit from that with our channel partners.
What about your capital costs? Are you seeing input costs go up as a practical matter?
Inflation has been pretty muted, actually, as reflected in our cost structure. So yes, we bought a great deal of products. Our capital spending is high as an industry. But overall, inflation seems fairly tame as far as our purchasing costs.
Was your capital investment affected at all by the tax cuts?
Yes, we were beneficiaries of the tax cuts last year, and a lot of that went to the bottom line. We are investing more. We have a very balanced approach to capital allocation, combining capital expenditures at a fairly high level with dividends and buybacks as well.
So for the whole series, we're really taking a look at these kind of companies that have a unique window into the U.S. economy. What is the biggest risk from your seat in the C-suite?
Well, we're certainly, we're exposed to our customers' cyclicality, and economies go through cycles. But looking at things right now, we're confident that our customers will continue to grow. And we're in conversation with our customers all the time, and I can tell you that they feel pretty bullish about the economy right now. They're investing and they're looking for growth.
One of the things that's interesting to me is sort of the data has been pointing every which way. We had the ISM manufacturing index up earlier. We've seen various different reports. I mean, how much do you actually pay attention to those relative to sort of your business planning, or is it more about your conversations with customers?
It's both. We do look at the macro indicators because those can be leading indicators for the direction of our business as well. We're also talking to our customers all the time. As I said, I mentioned I had a lengthy conversation with a group of customers yesterday. So we're trying to probe what they're doing at the fundamental level and the investments they're making and their sentiment. And I can tell you that overall they're still pretty bullish, cautious, but feeling good about their prospects.